Okay, so in this video, we will be discussing the presidential decrees or RAs related to investment houses in the Philippines. So essentially the laws or regulations for investment houses. So the original one was made in 1973 with Presidential Decree number 129. And then there was an amendment in 1981. And then lastly, in 1997, there was RA number 8366. Okay, the last amendment was in relation to the capital requirements, citizenship requirements, foreign ownership, and then the capital requirements. Okay, so let's go over the original text first. So they have this rationale for issuing presidential decree back then. So there was a proposal to regulate the so-called investment banks back then. So they were called investment houses, essentially. Okay, so an extensive survey and study of the Philippine financial system had been undertaken in order to determine its adequacy in Philippine economic development, and an integrated set of recommendations were submitted. So essentially, of course, it's been known, from the very beginning that financial institutions have a role that they play in the economic development and growth of our country. Whereas the recommendations, as endorsed with modifications by the monetary authorities and made the basis of this decree, advocated the enactment of the statutory framework within which the underwriting of securities may be governed, and to the extent that these entities perform quasi-banking functions, to harmonize their operations with national monetary goals. So essentially, they need to be regulated so that, their activities are in accordance with the overall objectives and goals of the government, the country, okay, in line with the national monetary goals. Okay, so the decree shall be known as the Investment Houses Law. Scope or coverage: any enterprise which engages in the underwriting of securities, so we've discussed this in a prior video, of other corporations shall be considered an investment house, and shall be subject to the provisions of this decree and other pertinent laws, especially those related to the monitoring or supervision by the Bangko Sentral ng Pilipinas. Nothing in this decree shall be understood to preclude other enterprises from engaging in the mere buying and selling of short-term securities of other persons or enterprises. So of course, you have your investment houses, and then you have your individual securities broker or dealer, and then you have your trading, stock traders. Definition for the purpose of this decree, unless the context otherwise indicates. Definition: underwriting act or process of guaranteeing the distribution and sale of securities of any kind issued by another corporation. So there were actually three types of underwriting. The first one is, you have your firm commitment, you have your best effort basis, and then the other one, I forgot what it's called. But I think later those would be discussed as well, okay? Essentially, what happens is that the investment house or their agent, they would assign someone to underwrite the securities. Underwriting means, this company needing a capital infusion would be issuing securities, probably in the form of bonds or preference shares, all right, or ordinary shares if they're not publicly traded in the stock exchange, right? And then they would go through the investment houses or other financial institutions, but mainly investment houses. And then the investment houses, their agents would be responsible for selling the securities to their clientele, okay, to investors mostly, all right, who are coming to their investment house to seek where they might put their money on as investments, right? Securities: written evidences of ownership, interest, or participation in an enterprise, or written evidences of indebtedness, bonds, ownership, so this refers to stocks, and then indebtedness refers to bonds of a person or enterprise, and includes but is not limited to the instruments enumerated in the Securities Act. Organization and registration shall be organized in the form of stock corporations only. SEC, again, regulation authority for partnerships and corporations. So since investment houses will be organized as stock corporations, so they need to register with SEC. Okay, and then they need to submit upon application the articles of incorporation, and then the bylaws and other forms that are required. Okay, SEC shall not register unless it is satisfied from the evidence submitted to it that all the requirements of this decree and of the existing laws or regulations to engage in the business have been complied with, that the proposed enterprise will not be in conflict with public interest and economic growth, that the amount of capital, proposed organization, direction, and administration, as well as the integrity, experience, and expertise of the organizers and the proposed managerial staff provide reasonable assurance that the enterprise will be conducted with financial prudence. Okay, essentially they want to be assured that these people know what they're doing. They have someone in their management who are experts or knowledgeable on how to run an investment house and how they should go about their operations. In determining compliance with the provisions of subsections B and C above, the SEC shall consult the Monetary Board of the BSP. All applications for registration of the Articles of Incorporation of investment houses shall be accompanied by 3 copies of the proposed articles, a statement under oath of the educational background and experience of the organizers, directors, and the proposed managerial staff, as well as information on any position concurrently held by them in other financial or banking institutions, because they have a restriction. One of the restrictions is that a director of an investment house cannot be a director of a bank at the same time. Okay, so you're either a director of a bank or you're a director of an investment house. Okay, but you cannot be both at the same time. Number 3, a projected statement of assets and liabilities of the proposed investment house. Okay, so essentially your beginning capital, your investment, or what your statement of financial position would look like upon organization of the business. A tentative program of operation for 1 year, so some sort of feasibility study or operations manual, including its investment direction and volume, what types of investments you're going to be undertaking, and then how much, the volume, transaction volume. Such other information as the SEC may require in support of the application and to enable the Commission to determine the justifiability of establishing the proposed enterprise. All right. So we have the transitionary provisions here, those already operating before this law was issued. Citizenship requirements. Majority of the voting stock of an investment house shall be owned by citizens of the Philippines. In determining the percentage of foreign-owned voting stocks in investment houses, the basis for the computation shall be the citizenship of each stockholder, and with respect to corporate owners of voting stock, the citizenship of the individual owners of voting stock in a corporation holding shares in that investment house. So if it's an individual, so of course the citizenship of that individual. If a corporation is a shareholder at an investment house, so the citizenship of the individual owners of the corporation, voting stock of that corporation. Majority of the members of the board shall be citizens of the Philippines. Prohibitions. Okay. No director or officer of an investment house shall concurrently be a director or officer of a bank. All right. The investment house shall engage in banking operations because they are not a bank, they are an investment house. Okay, that's very simple. Powers. In addition to the powers granted to corporations in general, an investment house is authorized to do the following: arrange to distribute on a guaranteed basis securities of other corporations and of the government. So you have government bonds, right? Treasury bills, or its instrumentalities. Participate in a syndicate undertaking, or to purchase and sell, distribute, or arrange to distribute on a guaranteed basis securities of other corporations and of the government or its instrumentalities. All right, so essentially it's dealing with securities. Arrange to distribute or participate in a syndicate undertaking to purchase and sell on a best efforts basis securities of other corporations and of the government or its instrumentalities. Okay, so you have your firm commitment. Essentially, firm commitment, what it says is that if they are unable to sell it to their clients, then the investment house itself would be buying the securities, right? Best efforts basis, they would do their best to market the securities and sell it and distribute it to their clients. But in case they are unable to sell everything, then the remaining securities would be returned to the issuing corporation or issuing entity. Okay. Number 4, participate as soliciting dealer or selling group member in tender offers, block sales or exchange offering or securities, deal in options, rights or warrants relating to securities, and as such other powers which a dealer may exercise under the Securities Act. So some of the mentioned securities here are quite complicated. So some sort of advanced investment and quite complicated. Okay, maybe in IPM, investment and portfolio management, we'll be discussing them. All right. In advanced accounting, these are also discussed. Are intermediate financial accounting. Okay, essentially they are a type of investment securities, right? Number 5, promote, sponsor, or otherwise assist and implement ventures, projects, and programs that contribute to the economy's development. Act as financial consultant, investment advisor, or broker, of course. As an investment house, they also provide that kind of service, advisorship. Act as portfolio manager and or financial agent, but not as trustee of a trust fund. You have trust companies for that. Or trust property as provided for in Chapter 7 of RA 337. Encourage companies to go public and initiate and or promote whenever warranted the formation, merger, consolidation, organization, or recapitalization of productive enterprises by providing assistance or participation in the form of debt or equity financing, or through the extension of financial or technical advice or service. Okay, sometimes, of course, they have clients, right? Their clients could be individuals or businesses in the form of corporations as well. So sometimes they do provide consultancy services. So they provide advices on what these companies might do to improve their situation. And then sometimes they could, as stated here in number 8, encourage companies to go public. So they could, going public, it means you're going to be traded on the stock exchange, on the stock market. So the public would be able to buy your shares through the platform, right? So you can solicit capital from the general public. Okay, and then of course you just have to decide on how much one share would cost and how much or the volume of the number of shares that you're going to issue to the public. Next, initiate, promote whenever warranted the formation, merger, consolidation, organization. Formation, of course, let's say the investment house has an individual, individual client, and then this client has a lot of money and they are somehow interested in starting a business, so they could provide advice on how to start their own business. Merger, so let's say normally companies that are in the same industry, not exactly, well, they are competitors, right? But if they are not actually going against each other, then it might be possible for them to simply merge or join forces and combine their resources to better improve the provision of the product or services that they are offering the market. All right. Consolidation, so this has something to do with a group of businesses, sometimes owned by the same people or group of individuals, and they'd like to consolidate. Some sort of merger and consolidation, it's somehow the same, right? In consolidation, you have your parent company and then you have your subsidiaries, and of course they have to submit consolidated financial statements or financial reports. All right. Reorganization, normally for reorganization, this happens when a company is having financial troubles or they are struggling financially. So what they do is that they reorganize. So there are certain, requirements before they can do that. Sometimes they need approval from the SEC. And then after the reorganization, so it's like starting fresh, okay? And then essentially what happens is that if they have reported losses or, negative retained earnings prior to reorganization, then after the reorganization, that loss or negative RE, retained earnings, would be zeroed out, okay? So they won't be seeing anything, negative on their financial statements. Recapitalization. So for example, a successful business would like to, expand. So they would have recapitalization. Let's say in their original application to the SEC, the authorized capitalization is only 100 million. But since they're very successful and there's, huge potential for them to expand and provide more stores, more warehouses, or things like that. So they can increase their capitalization to, let's say, 200 million or 500 million. So in that sense, that's recapitalization. They need to, apply with the SEC and have that application approved, okay, before they can solicit infusion of capitalization into their business, okay. Number 9, undertake or contract for researches, studies, and surveys on such matters as business and economic conditions of various countries, structure of financial markets, and institutional arrangements for mobilizing investments. So again, prior to this, we've discussed we've had another discussion about investment houses or investment companies, right? And then we've also discussed securities broker and dealers, and those brokers or dealers, they can conduct researches and studies since they are already spending so much of their time monitoring the performance of the companies or the companies that they are investing in, or the companies that have great potential to invest in. So they can undertake researches, make studies, make surveys, and then have them published in certain institutional papers or institutional press releases or magazines or publications, okay? And then number 10, acquire, own, hold, lease, or obtain an interest in real and or personal property as may be necessary or appropriate to carry on its objectives and purposes. So as a business itself, so the investment house could also acquire properties, right, in its own name. 11, design pension, profit sharing, and other employee benefit plans. Okay, so they can also do that. Such other activities are business ventures as are directly or indirectly related to the dealing in securities and other commercial papers unless otherwise governed or prohibited by special laws. Alright. Okay, minimum initial paid-in capital back then is only 20 million pesos. Credit policies, coordinate their credit policies with the general credit policies of the Monetary Board of the Central Bank, BSP. Reports, investment houses shall submit to the SEC and to the BSP semi-annual report of operations and financial conditions signed under oath by its chief accountant and verified by the president. SEC may, at its discretion, require investment houses to include their underwriting commitments as contingent accounts in their financial statements or, as disclosure in the notes to financial statements. Regulations within 6 months after the approval of this decree. Okay, the central bank, SEC, shall promulgate the necessary rules and regulations of the provisions. Regulatory powers of the BSP, investment houses shall be subject to such regulations of the BSP or non-bank financial intermediaries as may be promulgated. Okay. The regulations may include, but not limited to, minimum size of fund acceptance or receipt, methods of marketing and distribution, terms of placement and maturities, uses of funds may be modified by the Monetary Board insofar as they apply to investment houses. Monetary Board may, at its discretion, determine whether investment houses may be permitted to perform quasi-banking functions. Okay. Monetary Board is hereby authorized at its discretion to require any enterprise which is engaged or proposes to engage in quasi-banking functions to incorporate as an investment house. So if any other type of financial institution actually engages or proposes to engage in quasi-banking functions, then they have to register as an investment house, register as a corporation with the SEC. If the Monetary Board decides to permit investment houses to engage in quasi-banking functions, the board may require, as a condition precedent, the obtaining of a certificate of authority for the purpose from the Monetary Board. All right. All financial institutions, they do get a certificate of authority from the Monetary Board at the BSP. All right. Whenever the Monetary Board authorizes an investment house to engage in quasi-banking functions in accordance with the provisions of this section, the board may subject investment houses to further regulations, as amended, which may include but not necessarily be limited to liquidity reserve requirements, capital to risk asset ratio. So these are, in their financial statements, they have to watch these figures and ensure that they are within the set limits. Okay. Interest rate ceilings, and such other constraints as the board may deem necessary. In the exercise of its authority in this section, the Monetary Board may, whenever it determines the circumstances so warrant, subject an investment house to special examination, some sort of surprise audit. Okay. Whenever, on the basis of the report submitted by or upon examination of the books and records of an investment house, the central bank finds that the investment house is not complying with the provisions of this section, with the pertinent provisions of this decree, or other laws or of orders, instructions, rules, and regulations issued by the Monetary Board pertaining to non-bank financial intermediaries and quasi-bank activities, the board shall issue a cease and desist order, so you stop your operations, okay, upon the investment house concerned. Failure on the part of an investment house to comply with the order shall subject said investment house to a fine. Okay, back then, this is what again, 1973, 200 pesos for every day the order is violated. So it's not much, right? Okay, but of course there are amendments already. Again, it was mentioned here that they would be subject to other rules provided by the Monetary Board or the BSP. So BSP regularly issues circulars. So any circular that pertains to all financial institutions or non-bank financial institutions, then those would also apply to investment houses. All right. Applicability of Securities Act. Okay, an investment house may engage in the business of a dealer or a broker under the Securities Act without obtaining a separate license for the purpose. I think there were amendments here already. They need to be licensed nowadays, right? Applicability of Corporation Law. The provisions of the Corporation Law, insofar as they are not in conflict or inconsistent with the provisions of this decree, shall apply to investment houses. So you have your transitional provisions. We will not tackle that because that's over. Penalties for violation. Again, 200 pesos for every day of violation or non-compliance. Okay, until they have complied with it already. Okay. What's this one? Without prejudice to the provisions of the preceding paragraph, or any person or any director or officer of an investment house who violates or does not comply with the provisions of this decree issued by the SEC or the BSP shall be punished by a fine of not more than 20,000 pesos. Again, this is back then. This is a lot of money back then, right? Or an imprisonment of not more than 5 years, or both, at the discretion of the court. Severability clause, repealing, and then effectivity. Again, this is in 1973. All right. And then let's go to Presidential Decree number 1797. This was in 1981 amendment. Okay, amendment to the Investment Houses Law. There must be greater cooperation among governmental agencies to ensure the accomplishment of desired objectives, especially economic and monetary objectives. There is a need to provide flexibility to government authorities in settling the capitalization requirement for investment houses in order to enhance the capability of the latter to compete and to finance the requirements of economic development. So first section, amendment to section 4. In determining compliance with the provisions of subsections B and C, the SEC shall consult with and act pursuant to such recommendation as the Monetary Board of the BSP may make. Okay, minimum paid-in capital shall be 20 million, provided that the Monetary Board of the BSP may prescribe a higher minimum capitalization if warranted by circumstances. Okay, penalties for violation, I think it's still at 200 pesos per day. Okay, and then who ordered them shall be solidarily liable. The fine so imposed shall be paid to the government of the Philippines through the SEC. All laws. Okay. And then lastly, this is an act liberalizing the Philippine investment house industry, amending certain sections of PD 129 as amended. Alright, so declaration of policy. Policy of the state to expand and strengthen the capital base of the economy in order to ensure sustained economic growth and development. Toward this end, the Philippine investment house industry is hereby liberalized, increasing foreign equity participation and raising the minimum capitalization of investment houses to enable them to meet the present and future demands of the market. Because 20 million is currently, that's a low amount of money already. It's not much. It's not going to be able to support many businesses, right? Okay, citizenship requirements. At least 40% of the voting stock of any investment house shall be owned by citizens of the Philippines. In determining the percentage of foreign-owned voting stock, same. I think this was the addition. Foreign nationals may become members of the board of directors to the extent of the foreign participation in the equity of said enterprise, right? Because here it said that at least 40% of the voting stock, right, shall be owned by citizens of the Philippines. So if it means that foreign ownership could be as much as 60%, right? And then in the previous decree, it was said that board of directors, majority of which should be Filipino members. Okay, since it says majority, so it's either more than 50%, right? But there's this additional clause: foreign nationals may become members of the board of directors to the extent of the foreign participation in the equity of said enterprise. So if 60% of the equity came from foreigners, then the members of the board can also be 60% composed of foreign nationals. Okay, so the previous provision that majority of the BOD should be Filipinos would no longer apply. Alright, so let's say 50-50 is the ownership, 50% Filipinos, 50% foreigners. Then foreign nationals may become members of the board up to 50% as well, okay, to the extent of their participation in the equity. Alright, for the capital requirements, it has been raised to 300 million, okay? And then the transitionary provision was 200 million upon effectivity of the act, and then an additional 50 million after 1 year, and then another 50 on the second year, so making it 300 million pesos, right? The Monetary Board may prescribe a higher minimum capitalization in order to promote and ensure the stability of the Philippine capital market and the competitiveness of the investment house industry in line with national economic goals. So the Monetary Board shall, within 6 months, prescribe a risk assets to capital ratio and other capital adequacy ratios in order to provide broader protection to the investing public. Okay, one thing I noted from the financial statements of financial institutions, they do have a section for risk management and some sort of a section which can be checked easily by the Monetary Board or the BSP if they comply with their capital ratio, capital adequacy ratios that they impose upon financial institutions. Alright, so this is it for investment houses law. Again, we've covered PD 129, PD 1797, and then RA 8366. Alright, so that's it for this one. Thanks and